Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Logify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.
Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
Good morning.
Good morning.
Happy Monday.
The whole gang's here.
Welcome
back,
here.
Jamie.
Thanks for having me again.
Yeah,
You're always welcome.
Yeah, I was gonna say it's not like we don't want you back. We kind of want you every week, but you're such a busy guy. We have to accept the once a month. We have to accept it.
It's my favorite Monday of the month.
That's
It's
what we
a
love.
fluctuating Monday. It's not the first Monday of every month. It's not the last Monday of every month.
It's a surprise
just-
Monday.
Yeah, keeps the listeners on their toes and us.
Exactly. That's also great because it's like, yes, we have Jamie this week. Thank the Lord. we have actual data.
We're not just saying, well, I think I saw this percentage in the article.
Yeah.
Well, it's fun when I go back and listen to the episode from the prior week. It's like, all right, I got to write down all the data points I need to bring that you guys were talking about from previous episodes.
Screaming. We were screaming for it.
We used to have a segment called was it Stat of the Week?
Yeah.
Jamie, what's the stat of the week that you saw in the past 7 days that jumped out at you?
Yeah, it was actually I think it's on the docket for today, but I'm gonna pivot because I love the economic data just as much as I love the short-term rental data. And we got the inflation reading last week of 0.3% month over month increase. And that was like the first month within like the past 4 where it was like at or below expectations. And that caused 10-year interest rates to fall. That caused 30-year fixed mortgages to fall. And we've been just so high over the past few weeks, like 6 weeks. And as I mentioned last week, I'm under contract to buy a short-term rental. And by waiting 4 weeks to fix my rate, I saved 0.5% on my mortgage rate. And I was watching that number. Knowing that it came in, if it came in at 0.3, I was going to save a lot of money, and it did. And like, I think real estate agents around the country were like cheering for CPI, which is just so funny. You get everyone so focused on one number, and like a 0.3 versus a 0.4 is going to make so much difference for the downstream implications. Like, it was great.
Real estate agents are happy about that. But on the flip side, don't they have a pretty big change coming their way in June where they're not allowed to take a check from the sell side? Is that right?
I think it's the seller, not the buyer. Yeah.
Yeah, I mean, there's all sorts of changes that are going to be coming down the line with the sort of NAR lawsuits, and but in the end, it's going to be pretty minimal changes. More stuff disclosed up front, like maybe some interesting opportunities for companies like Zillow or Redfin that have more sort of offerings that they could bring in for both on the buy and sell side.
Yeah, it seemed like an industry that was ripe for some disruption. There's a lot of stuff. It's like, why do I need you for this? So
it's been ripe so long for disruption.
Everyone except the realtors are excited about it.
Right.
Pretty much.
Yeah. For any of our listeners that are realtors, we're so sorry, but we're not at the same time. We love you, but It's time for just some disruption. Before we get into more of the meat of the episode, I do want to say if you're tuning in on the live, let us know who you are. We want to engage with you. We want to say hello. So say hello. And then second, we know we have to talk about our good old friends at Sojo. So Sojo is amazing. You get your amenities on autopilot, but not only your amenities, your pantry. We know a fully stocked stay is a better stay. So get Sojo Pantry so that way your guests aren't having to be like, where's the toilet paper? Why is there not enough of this? Why is there not enough of that? There was only 1 cup of coffee available for 5 people. This sucks. We all want a good experience. So get with Sojo. Go to getsojo.com/GMH to get 30 days free. They'll send you a sample kit. You'll see how pretty it is, how organized it is for your cleaners. It's the best experience. So just get it and get on top of it for your guests' sake. All right. Now back to the episode. Okay. So Jamie Lane, what's the big number one topic for you today? What's the big number one that you're like, yes, we gotta jump into this right now? Could be from last
Yes.
or it could be new. Whatever you want.
Yeah. So I think the one I wanted to jump into to begin with was the second home mortgage demand down again in 2023. So this is data from Redfin. They pull it from Rate Lock data, and they're showing demand for vacation home mortgages fell 40% in 2023. And it sort of plays into what we were talking about earlier with interest rates and where the 10-year treasury is. 10-year treasury, direct impact on 30-year fixed rate mortgages. 30-year fixed rate mortgages still above 77% on average, which is, and we all remember just 2 years ago when you could get a 2% mortgage. And not as much of an impact on primary homes, but a real significant impact on second homes, investment homes that eventually find their way through to new short-term rental inventory. And then they talked about sort of what we're seeing so far in 2024, which is that it's continuing to be down. So down 7% from the year earlier in April, and for real estate agents, for those sort of building their business around supply growth, that's not a great thing. But for us operators out there that have been dealing with double-digit supply growth over the past couple of years, that may be music to your ears. And our data sort of supports that. When we look at overall supply growth in April, we were at below 10% growth. And that is really the first time we've been below 10% growth since like 2021. So I think that's, and for all the operators out there sort of cheering of like, all right, finally some slowdown in supply growth. That's music to people's ears. So the exact number in April was 8.7% growth. And we look back at like this time last year was growing 16%. 2 years earlier was up over 20%. And a real steep slowdown. And when we look at specific cities, specific location types, we were actually negative in urban areas. So there was a 1% decline in the first half of the year. That was primarily because of New York. But then when we look at suburban, it was only up 7%. And then the fastest growth areas are still sort of on the mid-sized city and small city rural, sort of more the non-vacation rental or urban markets, where it's up north of 10%, but everywhere else around the country is really slowing down pretty significantly.
Yeah. From the Redfin report, Jamie, you mentioned vacation home mortgages are down 40% year over year.
Mm-hmm.
They're down 65% from the peak in 2021.
Yeah.
So an insane slowdown in mortgage originations. And you kind of see the graph flatline in 2018, 2019, more or less around 175,000 originations. And this past year, it's closer to like 80,000 originations, 90,000. So a really big slowdown, even from kind of the pre-pandemic years. Makes sense. Kind of the boom land is over. Rates are higher. People aren't making as much money putting them out on short-term rentals because supply has gotten so gluttonous. And it's just, I mean, I'm very fascinated with what's going to happen, because you can kind of see it coming. The prices in these markets is going to compress heavily. Lots of properties, they might get foreclosed on in the coming year or two, especially if rates stay high and there's no refinancing available. And then, you know, we're not going to go back to a 2008, 2009 era, but I mean, I remember properties in Destin being, when I was in college, just looking at how much these things cost in this downturn. And it was like $150,000, $175,000 for a 2-bedroom condo that today is $500,000. So I don't know, it might be a buying time in the next 2 or 3 years if this stuff continues.
Yeah, I think we're definitely in like the start of the correction phase for a lot of it. And it kind of depends. I mean, slowing down on the supply side in some areas where there's just been a tremendous oversupply of, listings and things like that, I think will be maybe some welcome relief, as long as you're not one of the ones that's, losing their supply. But I think that I don't know kind of the length of time that these things usually take, but I think it's probably a good thing. We had the COVID kind of bubble was so immediate and stark and extreme that it feels like this is just necessary.
Yeah, and sort of the other point of it is that there's so much churn in the industry, and and outside of maybe with the professional operators that sort of get fixed in with contracts, but when you look at a lot of individual hosts of people that sort of do it occasionally, they're in between long-term leases. Maybe their parents had stayed for a few months and now they're leaving, or they're taking over someone's house. Like, and the current performance can cause so much of an impact of, like, if I go in and get an understanding of what I'm going to earn today, and if it's not worth doing it, that can cause, irregardless of what's going on with interest rates, just like if I can only get $100 a night, like,
yeah,
just not worth it right now. And like with what you're seeing in performance across the country, like April was a pretty rough month for performance. We've seen the revenue again down the first half of the year when we look at RevPAR. Of all the markets that we track, and so we've now divided the country up into 317 markets. Just 20 markets had occupancy gains over the past year. So that's
only 20.
That's 298 out of the 317 had occupancy declines, and it's
how many had supply gains?
And all but like there's like 6 markets that had supply declines. So to your point of like, yes, and most of those markets are like a New York, or like there's specific things on the regulation side that are causing supply declines. So broadly, like, I don't think the industry performance is going to cause supply to go negative. I think it will slow it pretty significantly. And what I've seen over time and across many markets is that regulation is the only thing that can reverse course on industry supply growth, and that just like weakening performance, it may slow it, but it's not going to turn it negative.
Brandy, go ahead.
Oh yeah, well, we just were showing Terry's comment about insurance markets or insurance in these markets, and he's totally right. He's saying factoring in insurance on non-primary residents, it's going to get much uglier. Beach markets will be a disaster, and Florida in particular, like getting home insurance is becoming incredibly difficult. But there was actually a really great Wall Street Journal podcast about this, how it's not just in these states that there's like typically natural disasters, but like across the board, it's becoming more and more difficult to insure your home. So if that's happening on your primary home, your secondary home that's probably in a much more disaster prone location is going to add an extremely big financial burden that like every year is just increasing. So you're going to have to factor that into an already high mortgage when you're going to buy those homes.
Jamie, question on, so I think I'll put words in everyone's mouth, agree that supply is heading into a danger zone that it might not be sustainable for second homeowners and or potentially property managers because rates and occupancy have gone down so much. One, are we heading into a danger zone? And two, are hotels experiencing the same thing?
Yeah. One, on danger zone, I don't think we're going into an industry-wide danger zone. I think the vast majority of properties are still financed at such low rates that we could see even a much bigger reversion in industry performance, and most properties are still going to be able to cash flow. And that can depend on markets. That can really depend on when you bought, on what your expectations were, and how much sort of difference there is there, and how much you can absorb in terms of RevPAR decreases. But broadly, I don't think we're going to see a big number or any significant number of hosts, operators, owners sort of going into default because they can't generate enough cash flow for their properties. And then even if they do have to sell or aren't generating the cash flow, home values are still up. Like, we're not seeing a reversion in home values that is going to cause them to sort of, and that they're going to lose so much equity that we're going to see foreclosures and things like that happening. So unfortunately, home values have continued to gone up. We saw last month's figure, Case-Shiller still, I think it was up 3% last month, year-over-year basis. So that is continuing to sort of prop up the other side of the equation on just overall values continuing to increase.
And then on the hotel side?
On the hotel side, it's interesting. The market's really bifurcated. It's very weak on the economy and mid-scale segments, and actually still very strong on the upscale and above. So as a preview, I'm going to be doing a deep dive into what might be causing that with STR, the hotel data provider, that we're going to present at the Hotel Data Conference. And what we're going to try to see is if guests are trading from hotels to short-term rentals on the lower end because of the additional sort of affordability that short-term rentals offer with budget travel. So looking at specific markets where short-term or hotel demand is declining, and see if we can sort of see that that's sort of filling into short-term rental demand, because just about all these markets in these price tiers, short-term rental demand is positive, and maybe not always keeping up with supply growth. And occupancy declines causing some rate weakness, but still positive demand. And in a lot of those markets, short-term rentals are actually a higher percent of overall accommodated demand. There's more people staying in short-term rentals, like in a Myrtle Beach, than in a hotel. So it's pretty easy for people to sort of shift between those. And we're going to see if we can prove it out.
Is the flip side also true that is the luxury vacation rentals segment better or worse in this economy, whereas the luxury upscale hotels sounds like they're doing much better?
Yeah, there is a potential there. And one thing we're going to look at that is, especially with domestic travels and their travel, and we've talked about in the past and they were staying domestic, traveling overseas now. So those travelers that are staying domestic, are they now opting for the higher end hotel resort as opposed to the short-term rental? And with the additional services that go with it, that you get at a hotel, maybe they didn't feel comfortable staying at a hotel during COVID. Now that they're getting back and they want to get pampered and their incomes continue to go up, like, are hotels offering a better option for them, even though it doesn't have all the things we know and love about short-term rentals, like privacy, your own pool, your own rooms, your sort of shared spaces that and can make short-term rentals a better option.
Well, I think on the luxury side, if you're talking like kind of like the really high end of luxury, you can get the hotels that have that privacy, and you maybe don't want to be doing the cooking. So I think it really, like, the consumer behavior in those segments, when you're on more of a budget with group travel, even if you're going urban and you could afford a hotel, you might still want the STR option. But if money is not really a factor in the equation, I think that's why the luxury hotel segment might outperform. But then if you're going to like a ski resort, you'll get the $10,000 a night 7-bedroom home anyways. But there's just like which is such a nice option to have. You don't have to exactly.
And who wouldn't love that option?
I know. Someday.
I was gonna say Brandy's just out here throwing $10,000 a night. Go for it. You do you, boo. You do you.
I'll bring you all on the next ski trip.
I didn't think we were paying you that much, but I forgot. Maybe we're just getting Brandy just on that high end of the payroll.
Must have been an accounting error.
Yeah. But I think that kind of goes into one of our other topics about these, like, the quote Megahost cities. That was in the Business Insider article. So Jamie, kind of what's your take on all of that data?
We're losing her a little bit, but
yeah. So I think I got the question. There was on the Business Insider article on Megahost, and it's so funny. It was the sort of article generated out of a posted done like a year ago with a sort of throwaway chart on the markets with the highest percent of inventory sort of managed by professional vacation rental managers. And it sort of calls out markets like Steamboat or Vail or Destin, Fort Walton Beach area that and really are sort of dominated by vacation rental managers in that market. If you're going to buy a second home in Destin, you're more than likely going to have a professional manager manage that property for you. And what we did was we talked about some of the challenges as an individual host of operating in those markets. And would love if you guys were sort of answering that question of like, and if you were going into Destin where 70% of the listings are managed by professionals, like what are going to be the major challenges? One, and as we sort of called out in the article, it's like revenue management of the large professional managers. They're going to have dedicated revenue management teams, and others sort of on housekeeping of, and it can be difficult in the market. And if you're sort of trying to find cleaners that a lot of them are sort of already part of these large professional companies. And especially if you get in some of the more remote areas and sort of building out your own team.
Outer Banks.
Banks.
I've heard stories that Outer Banks literally has like some of the companies have buses that they'll pick up people an hour away and drive them out to the islands, like on Saturdays and Sundays on turn days, which makes revenue management really hard if you have to do turns every Saturday. But that is probably very much still the nature of the market in some areas that are very traditionally Saturday to Saturday, week-long summer stays.
Yeah, I was gonna say the one thing I'm sure that the smaller hosts, though, if they can't find the cleaners and they can't do all this stuff, they don't have a revenue management team, then I would say they're probably cleaning the place themselves. And if they have 1 or 2 units, it's like, okay, the cleaning fee goes to me. I have to do all the communication, like they were doing everything, which is unfortunate because I know as a host, like very much you don't want to be cleaning. But at the end of the day, if you got to do, what do you got to do?
Better margins.
Yeah, very true. Very true. The last topic real quick is Expedia had their Explore conference last week. From the sounds of it, it was pretty rowdy, but one of the cool, interesting things that I saw come out of it, and thanks for flagging, Jamie, was travel shops. And Expedia has done a really good job, I think, of leaning into the B2B supply, the white label of their inventory. We mentioned Delta a couple weeks ago that vacation rentals is starting to pop up. And I saw in the Expedia report that they have just added the vacation rentals to their API. So anyone that was pulling it previously is now showing vacation rentals, which is a fantastic thing for the industry, right? We saw Vrbo kind of lag in Q1 bookings and reservations compared to Airbnb, but I think moves like that can help push them forward. But travel shops is basically allowing influencers, brands, and even DMOs to customize their own shoppable marketplaces using Expedia's API. So we talked about it a couple weeks ago on the show, how Expedia follows the traveler, and 80% of people are getting their travel inspiration off of social media. Well, now they don't even have to leave social media to go to Expedia or any other booking site. They can follow that influencer through their regular booking moments, as Expedia says. So I love this play. Quite frankly, I've been thinking about an idea around this for a little while. So kudos to them for beating me to it. But I do think this is probably more the future of OTAs, is microsites and followers and inspiration, more so than just a mass database of millions of properties.
Yeah, I was gonna say, Michael and I talk quite often on a daily basis, and every time he's like, "Dude, we gotta start this thing." I'm like, "Oh, we don't need other projects
gonna be
on our
huge.
plate. We don't need other projects on our plate." And now it's already taken away from him. So sorry, Michael, if I swindled your fire.
Too slow. Too slow. Oh well.
And when I saw this, I thought similar, Michael. Like we already see and the potential for OTAs, like maybe, or even like the Google search, to be less sort of relevant if sort of the LLMs, the OpenAI, ChatGPT becomes like and takes a higher share of sort of our overall search traffic, search intent, if you're just going to find the answer. So the ability for influencers to talk about amazing travel, that to show up on your social, and then for them to earn a commission on that and help promote travel more broadly in different destinations, and having that be bookable on your Vrbo listing through some influencers sort of curated list, I think is pretty wild. And one, it's a reason to list, I think, on Vrbo in addition to some of the OTAs, because you might have influencers start promoting your listing because they can earn a commission on it. And your ability as a host to negotiate those things, and it's doable, but very tough. And I think an OTA sort of getting into that is pretty powerful.
Yeah, well, this also makes the kind of social booking trackable, because that's one of the difficulties right now, is actually tracking how much of your traffic is coming from like Instagram, for example. So this is a great way to really have more data behind those purchases.
100%. As a media company, myself, like the number one thing we're always trying to figure out is like, okay, obviously there's tracking links and you can embed things and do other stuff, but at the end of the day, a lot of people, especially on the podcast medium, they're always, "Oh, I heard it on the podcast. I'll just go Google HelloFresh and I'll just put in the code later," or whatever. And it's really hard to carry that through. So this is really cool and exciting, not just for the travel thing or side of things. I think it's actually going to impact media and obviously content in a lot more ways in the terms of sponsorships and revenues and all that other good stuff. So it's exciting. It's a good change.
Yeah. And last comment from me, at least on this, people build their kind of relationships around these followers and influencers, and it's goes both ways. So I would imagine bookers are more inclined or want to book and support that influencer that they know and love, that always travels with, you know, the two little kids or the Yorkies or, you know, whatever, right? And so it kind of takes the big business facade out of it, but Expedia still gets to capitalize, and you know, the industries like vacation rentals still get the bookings. It's just, you know, in a more direct way, a more personalized way. So I like it. I think it's a fantastic move by Expedia. I'm shocked no one's done it previously, but they got first mover advantage. I would imagine booking an Airbnb are probably scrambling right now to kind of catch up, because you would have thought a move like this would have come out of Airbnb first, quite frankly. So kudos for Expedia, who has millions and millions more options to book than Airbnb does. Kudos to them.
Well, I was gonna say Airbnb is becoming a social media platform anyway, so they're already moving in that direction.
I don't even know if Airbnb would do it, of giving up 6% of their commission to partners.
Yeah.
Maybe not 6, but something.
When I just booked an Airbnb in Madrid for June, and when you're finishing your booking experience, they want you to fill in more of your like profile, and just out of like defiance, I'm like, nope, you get like my photo that I've had up there since 2015 and my name and like a little blurb, but I'm not filling out this whole laundry list of personality, I don't know, traits and likes and stuff. I'm not.
They already
playing
have
the game
it.
yet.
They already
I know.
have it.
Well, just fill it out for me then.
Brandy's over here just like, no, I won't conform. I won't conform to it.
Brandy's pixeled, but from a customer service standpoint, it's like this lady, avoid all calls from Brandy.
Oh, that's
and
hilarious.
She's frozen, so she can't defend herself.
Awesome. Well, Jamie, I was going to ask, you have a conference coming up, correct? In June, you're going to Skift.
Yeah, I'll be at the
conference.
Yeah, the Skift Short-Term Rental Summit. I've got 10 minutes to talk about the economy and our forecasts, so that should be fun.
Only 10 minutes, man.
Rapid fire.
I feel like they don't know who they have on stage. Do they not know who you are? Jeez. All right. Well, good luck to that one. I kind of been teetering if I want to go to that. I want to, but it's like coordinating schedules and stuff. But that'll be exciting. Any other events or conferences, meetups, anything like that on your guys' end?
We got
more for Jamie.
the GMH retreat in Auburn coming up in 2 months. So if you want more information, let us know.
Seriously, yeah, we had great outreach, or not outreach, reach outs. People commenting about the retreat last week. So very exciting. It's getting close. I'm pumped for what we're about to pull off, but it's very, very fun way. Jamie, we're going to be missing you. Obviously, you're going to be on your long European vacation of taking a month and a half off or something like that. I don't know. Just
good for you, Jamie.
I'll be up in Maine at my with family.
Yeah, important things. It's all good. Priorities. He's got more important things than GMH and retreats. But we'll get you on the next one. So very excited. This was a fun episode. Tune in, joke around, kind of catch up, and really good topic. So thank you, Jamie, for bringing a lot of this to the show. That group chat was popping off with all these things. So you certainly help with the content and all the things. And I hope our listeners were enjoying it. Also got some good nuggets of detail for Brandy and Michael. I'll see you guys on next Monday. Brandy, I'll see you on Wednesday or Thursday. Super excited. See you in Miami. And for everybody else, we'll see you all again next week.
Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Lodgify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.